Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today, we're going to talk about our commodities update, do some technical analysis. I'll give you my financial opinion, and I'll dive right in to the analysis. So here's the DXY. This is the dollar. The dollar index basically flat today. We are pressed up against this resistance line, which is this trend line coming on the tops of these guys. We're pressed up against it. We are putting a wick at the top, which could mean, depending on how this month closes out, that we want to actually turn and head lower, that we tapped our head on that trend line. The 10-year yield has been selling off. This does look kind of like a shoulder, head, shoulder that is developing. If we head lower, it means that there is recessionary fears and that we could be entering a recession, that people are going into bonds. It may also mean that the Federal Reserve is in there buying a bunch of bonds. I know the ECB is buying bonds for the fragmentation that they were calling it. And maybe the Federal Reserve is in there and it's also buying bonds. So difficult to say what this is actually telling us if the Federal Reserve is in there buying a bunch of bonds. But right now, it looks like we want to go lower. And usually this is tied with oil. The CRB index moving sideways today. We've broken the downtrend line there. That looks better. On a long-term perspective, everything looks good. We're just putting in a pullback between what I would consider a wave 1 and eventually a wave 3. I think a wave 3 is probably coming based off of our state of energy. And what I mean by that is we are short energy throughout the world. Natural gas prices, high oil prices leads to higher inflation around the world. Lower dollar, lower 10-year yield usually leads to higher gold prices. We were higher, but not that much higher. So we've got a nice, good hammer candlestick yesterday. We went higher, but I wish we finished a little bit stronger than what we did today. So again, there's still some sellers out there lurking about. Silver selling off. This still doesn't look bullish to me. It looks more bearish. We got these big down candlesticks, and I see no buying pressure to fight back. So I still think this looks on the weak side. Platinum, on the other hand, looks a little bit stronger. We got some buying pressure here, some buying pressure here. Nice big bullish engulfing. We had smaller selling pressure today. That usually resolves itself upward. I call this the bloody nose. XAU to gold ratio, we're still not breaking this downtrend. We got more selling pressure. This is a bearish engulfing. Bearish engulfings usually result going lower, unfortunately. GDX also failing to break out. We still have selling pressure out there. This could go lower if the sellers want to push it lower. It sure looks like that. And SILJ is basically stuck between a trend line and a support line and is jammed in the corner there. Scrolling on down, crude oil selling off. Again today, we are in this downtrend channel, and we're still in the downtrend. We have larger selling pressure than buying pressure. So this, I think, will remain in the downtrend until buyers step in here and show us otherwise. Natural gas heading higher, looking strong. Nice big up days through here. Small selling pressure. So that's looking better. If a recession is coming, I do suspect that the markets will push this lower with everything else in the short term. Longer term, 6 months to a year, I think natural gas is going to do incredible things. Short term, difficult to say which direction this is going, but it's got momentum to the upside. We haven't seen selling pressure yet, but there are fears with the 10-year yield going lower, oil going lower, basically the commodity sector coming on back. They're out there. XOP, yeah, you know me. Selling off, we do have a bearish engulfing here. That usually resolves itself to the downside. So that's an XOP. The energy service companies, OIH, also seeing some selling pressure today. We're at the support level. Again, with all the recessionary fears, the 10-year yield going lower, this could go lower as well, depending on what oil does. Looking at uranium, 4650 is what I'm seeing on uranium futures pricing. Again, we're kind of trying to find some sort of support right where it's at. The Sprott Physical Uranium Trust. The Sprott Physical Uranium Trust did break out. We're doing a retest move, and we got to see if this thing can get some buyers to head north here. But right now, we got to see. We've got good support all through across this line going across here. URNM, the ETF, getting some stronger selling pressure, finishing strong to the downside. It looks like we cannot break out of here. We broke out. We just haven't seen the buying pressure yet. This could be a retest move where we come on back, go back to the support level, and then eventually work our way higher. But we got to see buying pressure. And with the overall markets getting a little bit shaky, the S&P 500 and the composite index, we could head lower with that if it chooses to drag us lower with it. COPX, copper ETF, we are getting selling pressure here. This is a bearish engulfing. Looks like we want to try to head lower. All of this is interconnected, guys. The 10-year yield, the dollar, all of these things. And right now, it's looking a little bit weak here for COPX. That's a bearish engulfing there where we could potentially head lower. The CRB to S&P 500, it's still hanging on inside this pattern here. And it's due to the weakness in the S&P 500. But CRB to S&P 500 ratio is holding steady. We've got REMX, which is the rare earth metal ETF. That is also seeing selling pressure. We're seeing selling pressure across the board here. So that does look like it wants to head a little bit lower. Maybe we do a retest move out of it. Lithium also seeing selling pressure. This was a bearish engulfing, another bearish piercing or engulfing here, which means we could potentially head lower. So that doesn't look strong. The S&P 500 selling off some. Again, we got to see buying pressure across all these. They seem like they're highly interconnected. We could have a recession. We could be in one, and we could be heading lower in all of these. And more strong selling pressure in the U.S. composite index as well. So we're basically seeing selling pressure across the board. XHB, small sideways day today, but it is above the trend line, the broken trend line there. Lumber selling off. Again, that's not a good thing, seeing all of these basically sell off. The only thing that was up a lot was palladium. Palladium's basically killing it. Maybe it has something to do with Russia. Cocoa futures, basically sideways. We've got wheat heading lower. This does not look strong at all. Heading lower there. Soybeans doesn't look strong. I would not be jumping in front of this. And then corn is also selling off. This does not look strong. I would stay on the sidelines for that. Copper itself, again, this doesn't look strong. I don't see all the buying pressure in here yet. I still think this has potential to head lower or at least go sideways at best. Coming on down, looking at MOO. This is the VanEck Agribusiness ETF. We were looking strong here, but we're getting some selling pressure again. And they're throwing these bearish engulfing patterns, which means we could sell off. We could sell off a little bit. Doesn't mean how long this will sell off, but we could head lower before heading higher, or maybe we head lower to the downside, because we're seeing it across a lot of different things. Aluminum looking a little bit stronger, up 2.22%. There we are heading higher there on the week. That's looking a little bit better. And then the Baltic Dry Index basically flat. We're getting support right where it's at. But overall, guys, with that 10-year yield selling off, it does look weaker. And we could have a recession in front of us. Now would be the time to kind of stack some cash to see what's going to happen. That's kind of what I've been doing. Just waiting. Platinum's pretty low. I do like platinum a lot. I do like that one probably more so than anything else at this moment, physical platinum. The companies themselves are looking pretty weak. So going to have to require some patience here. And we're going to have to probably ride through this if you're a long-term investor. If you're a short-term investor, I probably wouldn't be in these in the short term on the long side if you're trying to trade these. I'm in them. I haven't done anything with my investments, but it is looking weaker out there. We're starting to see some bearish engulfing candlestick patterns. If you don't know what that is, you can research it on Google. But yeah, there's still weakness in this market, and there's still sellers out there. If you guys like this analysis, give me a thumbs up. Subscribe to the channel. Subscribe to the website. That is below in the link below if you guys want to learn about market conditions where commodities take off, market conditions where stocks take off. They're both kind of opposing forces. Right now, when you get into a recession, sometimes they link up because of the leverage in the system, and it brings everything down lower. And commodities are highly dependent on inflation. And inflation usually gets transferred through, if it's a free market, the way that it usually works is you get more money printing in the system, more loans in the system, which is an expansion of the money supply, the M2 money supply. Then it gets filtered through oil. But right now, they're trying to hold oil down with the Strategic Petroleum Reserve and all these other things. I think they're playing with interest rates. They're playing with a lot of things. Interest rates also rotate money from stocks and bonds into commodities and precious metals. But I think they're in there. They are messing with some stuff. How much? It's unknown. We'll see. But that's what I've got for today, guys. Hopefully you're having a good day. We'll catch you next time. This is Finding Value.